Do you know that today investing in Bitcoin doesn't require you to set up a crypto wallet, memorize 24 seed words, or worry about losing your private keys forever? They used one click inside the very same brokerage account you already use and trust, and boom, you can have exposure to Bitcoin. This isn't science fiction anymore. It's happening right now. But the real question is, what does it mean for you, the everyday investor? And maybe even more important, what questions and concerns should you clear up before you take your very first step into ETFs, whether they're tied to Bitcoin or anything else? Because here's the truth. For most people, the idea of investing in ETFs sounds simple, yet it raises a storm of doubts. What exactly is an ETF? Do I need thousands of dollars? How do I choose the right one? What if I make a mistake? And what about taxes? Will the IRS come after me if I get it wrong? These are normal questions, and today we're going to walk through them carefully. So you not only understand what a Bitcoin ETF is, but also gain the confidence to navigate the world of ETFs in general. What is an ETF really? Let's start simple. An ETF, or exchange-traded fund, is like a basket. Imagine you want to buy apples, oranges, and bananas, but instead of buying each fruit separately, you grab a basket that already has a mix of them. That's an ETF. It holds a group of assets like stocks, bonds, commodities, or in this case, Bitcoin, and you buy shares of that basket. The special thing about ETFs is that they trade on the stock market just like a normal share of Apple or Amazon. The price moves up and down throughout the day. So when you hear Bitcoin ETF, it simply means a fund that holds Bitcoin or Bitcoin futures contracts and lets you get exposure to its price without you having to deal with crypto exchanges, wallets, or complicated passwords. Why does this matter for beginners? If you're new to investing, ETFs are often the first and safest step. They're easier to understand than diving into single stocks, and they provide instant diversification. But with Bitcoin ETFs, something even bigger is happening. They're making crypto investing mainstream. No more fears of losing your keys or sending Bitcoin to the wrong wallet address. It's all within the regulated, familiar world of your brokerage account. Yet at this point, most new investors have burning questions. So let's go through them one by one. Concern number one, how do I pick the right ETF? The truth is, there are thousands of ETFs today. Some track the S&P 500, which is basically the 500 largest companies in the US. Others focus on sectors like technology, healthcare, or energy. Some track bonds, gold, or oil. And now, some track Bitcoin. The risk for a beginner is choice overload. What if I choose the wrong one? Here's the simple way to think about it. If you want broad exposure to the US economy, then an S&P 500 ETF is the classic choice. If you want stability and lower risk, then bond ETFs can provide safety. If you want to dip into crypto without the tech headaches, that's where Bitcoin ETFs come in. For example, if you pick the iShares Bitcoin Trust or the Fidelity Wise Origin Bitcoin ETF, what you're really buying is Bitcoin exposure wrapped in the security of an ETF structure. Concern number two, how much money do I need? A lot of people think you need thousands to start investing. That's not true. With ETFs, you only need enough to buy one share. Some ETFs are $40. Others are $300. And many brokerages now even allow fractional shares, meaning you could invest with as little as $5. Imagine this. You can start building exposure to the entire US stock market, or to Bitcoin with less than the price of a dinner out. That's how accessible ETFs have become. Concern number three, what about commissions and fees? This is a very common fear. Am I going to get eaten alive by fees? The answer depends on two things. Broker commissions. Many US brokers like Robinhood, Fidelity, or Charles Schwab now offer commission-free trades on ETFs, so you don't pay a fee to buy or sell. ETF expense ratio. This is the annual management fee that comes out of the fund itself. Think of it as paying the fund manager to keep the basket organized. Most large ETFs have incredibly low fees, sometimes as little as 0.03% per year. That means if you invest $1,000, you pay just 30 cents annually in management costs. Even Bitcoin ETFs, though slightly higher, are far cheaper than what crypto exchanges charge for buying and selling. Concern number four, is it safe? Safety is always the number one worry. Let's break it down. If you buy a Bitcoin ETF through a regulated US brokerage, Your account is typically insured up to certain limits by the SIPC. That means your cash and securities are protected against broker failure, not against price changes, of course. Unlike holding Bitcoin directly, you don't have to worry about hacking, forgetting your private keys, or sending crypto to the wrong wallet. The ETF handles all of that. So while Bitcoin itself is volatile, the structure of the ETF adds a layer of trust and regulation that most new investors find comforting. Concern number 5. What about taxes? Taxes feel like a nightmare for beginners, but let's simplify. With ETFs, if the ETF pays dividends, you'll owe tax on that income in the year you receive it. If you sell ETF shares for a profit, you owe capital gains tax. In the US, if you sell within 1 year, that's a short-term gain tax, like ordinary income. Hold for more than a year, and it's a lower long-term capital gains rate. With Bitcoin ETFs, it's the same story. The beauty here is that your brokerage issues you a 1099 tax form, so you don't have to track every transaction manually like crypto traders do. For many, that's a game changer. Concern number 6. What if I lose money? This is the hardest fear to confront. And the truth is, yes, ETFs can lose value, especially ones tied to volatile assets like Bitcoin. The S&P 500 can fall 20% in a bear market, and Bitcoin can drop 50% or more. But here's where mindset matters. ETFs are not lottery tickets. They're tools for building wealth over time. If you invest with a long-term perspective, ups and downs are part of the journey. That's why many financial advisors recommend techniques like dollar-cost averaging DCA, investing the same amount regularly regardless of the price. So that way you buy more shares when prices are low and fewer when they're high, averaging out your cost over time. Concern number 7. How do I even start? For many beginners, the scariest part is just taking that first step. Here's the roadmap. Open an account with a regulated broker in the US, like Fidelity, Schwab, or Vanguard. Fund your account by linking your bank. Search for the ETF ticker you're interested in. For example, VOO for the S&P 500 or IBIT for Bitcoin. Choose how many shares or even fractional shares you want. Click Buy. That's it. You've invested in an ETF. The bigger picture. Why Bitcoin ETFs are a turning point. Bitcoin ETFs are not just about crypto. They symbolize a massive democratization of finance. For years, crypto was only for the tech-savvy, the ones willing to navigate strange exchanges, risk hacks, and memorize seed phrases. Now, with ETFs, Wall Street has opened the doors for millions of everyday investors to access this new asset class safely. And yet, the lessons we've walked through today, the fears about safety, fees, taxes, and choosing wisely, apply not just to Bitcoin ETFs, but to ETFs in general. Once you understand these fundamentals, you hold the key to diversifying your wealth and making more confident decisions in the financial world. The future of investing is about access and confidence. ETFs, whether tied to the S&P 500 or to Bitcoin, are tools that let you step into markets that once felt out of reach. But tools only work if you know how to use them. So the question isn't just, should I invest in a Bitcoin ETF? It's deeper. Am I ready to take control of my financial future with knowledge and discipline? Because once you overcome those first fears, safety, fees, taxes, and making mistakes, you unlock the ability to grow wealth steadily, one share at a time. What matters most is that you make it with eyes wide open, armed with understanding, not hype. Because in finances and life, it's not the opportunity itself that defines your future, it's how wisely you choose to use it. Thank you for joining me today. Please let me know what you think in the comments. Together we can make finance a force for good.